Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, the US Federal Reserve Chair Jerome Powell hails considerable progress in tackling inflation, as well as that Biden holds on to key Democrats despite tense talks over candidacy. We've got lots to talk about in the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. But the first article to talk about is obviously to do with Jerome Powell. Now, Jerome Powell has now come out in saying that the Fed has made considerable progress in its mission to beat back inflation, but was ultimately still waiting for better data. This comes as Powell once again reiterates that the Fed must wait for more good data regarding inflation before any interest rate cuts can be made. Now, of course, his testimony was something that we were very much looking forward to, very much kind of looking into and expecting, because anything that kind of Jerome Powell comes out with greatly affects the markets for obvious reasons, with him being the chair of the Fed and the Fed running the US's monetary policy, and therefore anything that kind of can add to the way that we see their monetary policy outlook helps us better predict and understand when maybe the next interest rate cut might be, or how the macroeconomic conditions may shape up over the next few months, which obviously affects markets greatly. Now, kind of what has been the history, what's been the context of the Federal Reserve over the past few months, past few weeks? Well, ultimately, of course, starting off the year, we were hearing a far more dovish tone from the Fed, as we've gone over a million times, with the Fed kind of expecting at least 0.25 percentage point rate cuts this year, with markets expecting even more than that, around 6 to 7 interest rate cuts this year, which is of course very, very much and very significant, of course, to note. Ultimately though, as the year's gone on, around the May time, March time even, we started to hear some more worrying signs from the US economy. We started to see inflation data prove far more stubborn than we previously expected, and ultimately services inflation stayed very, very stubborn in comparison to other inflation metrics, which started to decline. But ultimately, that kind of those figures that we were seeing from the services industry, as well as even the flat inflation rate, was ultimately staying around that 3% level rather than that 2% level, which of course is the inflation target for the Fed. And therefore, the Fed's monetary policy outlook changed drastically, and ultimately we went from talking about 3 interest rate cuts this year to only one 0.25 percentage point rate interest rate cut this year, which is of course a massive change. And we were even starting to hear from certain Fed officials comments around raising rates further, which was something that we really hadn't heard until until maybe October of 2023. So very drastic change in rhetoric. Ultimately though, what we'll kind of get into with this article is, ultimately, whilst Jerome Powell is saying that they need to wait for better data, that comment regarding considerable progress also links into what he said later in his testimony regarding that a move to the downside, cutting interest rates was now far more likely, it seems, than raising interest rates further. And obviously that brings a very dovish tone to the markets. At the same time though, we do have to preface that with the fact that ultimately, just because an interest rate cut is more likely than an interest rate hike doesn't mean that an interest rate cut is actually likely. It just means that an interest rate hike seems kind of out the question at that point. And ultimately, regarding keeping interest rates the same, obviously that's been the expectation since, of course, the Fed's changed its monetary policy outlook around springtime of this year, with us now kind of expecting no interest rate cuts until at least September. That's kind of the expectation date that it does seem like markets are pricing in at, and so that's kind of when we're expecting the Fed to cut interest rates next. Ultimately, at the start of the year though, of course, it's another kind of interesting note to make, was that basically markets were expecting the Fed to cut interest rates as early as March. Obviously that's long gone now, and as I said, we're talking about September now, so once again a very drastic change. But here we're hearing some very optimistic comments from Jerome Powell, which is very interesting to see, because he often takes this more cautious tone. He often takes the more hawkish position when he talks about inflation and that kind of thing. So it is quite interesting to now hear him talking in a very optimistic manner, as of course inflation data has proven to be stubborn and hasn't represented this optimistic outlook, which now the Fed chair Jerome Powell is starting to kind of explain and put out there. So very interesting to see from Powell, and it will be very interesting to see what comes from today's inflation data reading when we get that today. That's obviously the inflation data reading from the US, and obviously that core inflation rate figure is far more important when we're talking about what the Fed's looking at. So definitely look out for that. We'll come back to that at the end with the economic calendar, as I spoke about at the start, but definitely keep your eyes on that one. Very important indeed. With Powell's written testimony to Congress noting that he was optimistic regarding the US economy returning to a better balance, which comes as the Fed tries to drive inflation back down to its 2% target. The Fed's preferred inflation gauge provided a 2.6 percentage point inflation rate figure back in May, which provided encouraging signs to the Fed that inflation was in fact on the downturn. Ultimately though, as Powell did note, the progress is gradual and modest. His conclusion was that more good data would strengthen his confidence of the Fed so much, strengthen the confidence of the Fed so much that they would be sure that inflation is moving sustainably to the 2% target. An interesting note that he made was that the labour market conditions have cooled and ultimately have remained strong, whilst also remaining strong. And ultimately, Powell and the rest of the Fed are in a very tricky situation in which lowering rates too early could destroy plans to tame inflation, but ultimately keeping rates too high for too long could push more Americans into the territory of unemployment. This trade-off was specifically noted by Powell in his opening remarks. His key point was that the policy decisions would be made meeting by meeting, but interestingly he did note that the next move was more likely a cut than a rate hike. So that's kind of what I spoke about earlier, and a very interesting point of course made by him there regarding cutting interest rates rather than raising rates any further. So we can kind of somewhat seemingly start to rule out the idea of interest rate hikes, which of course would seem like something that is very obvious to say at the start of the year, but now with inflation proving far more stubborn, obviously that kind of question re-emerged and came back into the picture. So definitely keep your eyes on this topic, of course, that goes without saying, and definitely listen out for that inflation figure reading today regarding the US's economy. So definitely look out for that one. That's all to squat on this article though regarding Jerome Powell and that kind of thing. Next article returns to the topic of US politics, which is of course the main topic of discussion in yesterday's morning market briefing, when we were once again kind of talking about this topic, with Biden and the Democrats, with Biden kind of jostling to maintain his kind of control over the Biden administration, but ultimately, more importantly, the Biden candidacy, the Democratic candidacy for the presidential nomination. And ultimately, that's kind of been the key topic of discussion within US politics. And the reason why this has kind of become a very important topic is, of course, following the Trump versus Biden debate, which took place a few weeks ago, maybe a week or two ago now. But ultimately, in that debate, of course, we saw a very weak performance from Biden, a situation which obviously played out against Biden's favor, with Trump kind of often making jokes and remarks about the fact that Biden seemingly couldn't kind of speak proper words or kind of finish off his sentences and stay on the topic. And that was a kind of key attack that Trump made, and obviously we've seen the kind of fallout from that now, as Democratic voters, even Democratic congressmen and women, have obviously now started to call for Biden to drop out the race and hand over the torch, as this photo does kind of note, and ultimately therefore enable a new candidate, a new Democratic candidate, to move in and beat Trump in this presidential race, which at the moment puts Trump ahead in all of those battleground states, all of the swing states in the US. Trump is leading at the moment. Why that is? Well, ultimately, Trump is leading regarding the topics of the economy. Ultimately, more voters in the US believe that Trump would be a better president regarding the economy. He would control the economy better than the way that Biden has over the period of his administration. And obviously, we've seen kind of similar feelings be reflected affected across the world, in Britain, Europe, and elsewhere, of course, as the world has faced, exorbitant inflation levels following Russia's invasion into Ukraine, and obviously emerging out of the lockdown period, where supply chains kind of weren't able to function at the same extent. And then as we've re-emerged, basically, we've built all of that inflationary pressure up, which now all of these presidents or prime ministers or, congressmen or, MPs are now having to deal with, within their kind of chambers of the legislature or executive, and that's kind of what we're seeing playing out. Now, Biden has now received the backing of some very important Democrats, with this including some of the members of the Progressive Congressional Caucus. This comes following Democrats in Congress being torn over the fate of Joe Biden's re-election campaign, and that was the kind of key thing that Biden was trying to hold on to, is that re-election campaign. And ultimately, many of the Democrats were looking at this, and possibly some of them were looking at this as a way for themselves to kind of get in and possibly put themselves ahead for the Democratic candidate, but possibly also these Democrats were just simply worried about the fact that this was destroying the face of the Democrats. This was destroying the image of the Democrats, which were now being represented by someone that basically should be in an elderly home. That was the kind of statements being made on social media, and arguably could be said about what some Democrats were also saying within Congress, with many congressmen and women pulling their support from Biden over health worries. And that's kind of what I was linking to there. As well as Biden achieving the support of the progressives, he's also found support with the African Americans Caucus and the Congressional Hispanic Caucus. Since such news has been received, no new high-profile defections have been received. Yesterday, several House Democrats made their case for sticking with Biden after claiming that attempting to replace him would damage their chances of beating Trump. Ultimately, though, many Democrats are worried about Biden's polling numbers. So that's another thing that's, of course, affecting the way that Democrats are thinking about this, as they're maybe saying, if Biden's losing the polls, it doesn't look like he's going to be able to gain back on those polls with the way he's speaking at the moment. We're not going to see some very charismatic Biden come out and start winning back voters. Maybe it's worth just, shooting in the dark and getting a new person in to see if they can possibly bring back those polling numbers in some way. But definitely keep your eyes on this topic. It's, of course, very important regarding markets and that kind of thing, and affecting polls affects the market. So definitely keep your eyes on this topic. Next to talk about, though, is, of course, the charts, as we have now covered everything on the articles. Now, to begin with, like always, we are talking about US indices, beginning with the US 30, of course, the Dow Jones, where once again we're facing the same price action that we've now seen for like 2 weeks, 3 weeks, in which, we've just seen the Dow Jones basically range around, consolidate even, and make no real move to the upside nor downside. As we can see here from about, Friday the 21st of June, prices really stayed around the same levels, as you can kind of map out between those two zones. Now, obviously, as I noted in yesterday's morning market briefing, there's a stark contrast between what we're seeing with the Dow Jones and the tech-driven S&P 500, which, in contrast to the US 30, we're seeing, massive gains, stocks hitting their all-time highs within the index, and ultimately we're seeing the S&P 500 as a result make all-time highs. With the US 30, though, we're just seeing this ranging motion. We're seeing, we're seeing just price consolidate. Really, no moves made to the upside nor downside. And what we saw play out yesterday was ultimately kind of a sell-off to the downside after we saw this kind of upswing on Monday. So on Monday, we saw this upswing, which saw price react to this higher area of liquidity, this higher level of liquidity around the 39,600 level. And now, over the course of yesterday, we've seen price kind of do the same, but to the downside, with price spiking to the downside and tapping around the kind of 39,200 level. So we're kind of bouncing between these two two key psychological levels, and arguably staying just above this key liquidity zone, which has marked the middle of this range that has somewhat formed around these levels. So definitely keep your eyes on US indices though. Obviously, it will be very interesting to see whether the inflation figure has a large impact on the US 30 today. Obviously, the US 30 is less impacted by certain macroeconomic events because, of course, we know that these larger companies hold larger cash reserves and therefore are less affected by macroeconomic conditions. But nonetheless, consumer behavior, supplier action, all of that kind of thing still affects the markets greatly, and therefore definitely keep your eyes on that inflation figure and definitely keep your eyes on the Dow Jones. Next to talk about though is the dollar, which of course is far more relevant when we're talking about the inflation figure that we are receiving today. And noting what took place yesterday is that we did kind of see this continuation to the upside, where on Monday we saw this kind of consolidation at the very bottom of the market that had formed at the end of last week. So over the course of last week, as I noted, we really just saw this decline, whereas, to start off the week we saw this consolidation, this possibly, now that we've seen this movement to the upside, you could call that movement a period of accumulation, and now we're seeing this kind of push to the upside, as one would expect during this kind of period where we're kind of waiting for inflation data and that kind of thing. So the markets are pricing in or getting ready for that inflation rate figure, pricing in the expectations and that sort of thing, rather than looking at maybe previous data like we received last week. Now, regarding where price is currently sitting at, you could say that price is sitting somewhat, or kind of holding within somewhat of a kind of small liquidity zone, a kind of key resistance level, and ultimately therefore we could expect these large financial institutions, key asset managers and portfolio managers getting in their sells before, of course, their bearish orders, before, of course, that inflation figure does come out. As seemingly on Monday, we saw those bullish orders get in at the bottom of the market. So definitely keep your eyes on the dollar. It's interesting to see how things are playing out. But yeah, that's all to talk about on the dollar. Next to talk about is Euro USD, where, reversing the image on the dollar, obviously, we've seen a sell-off over the course of yesterday from that period of consolidation which formed to start off the week. Now, that level which price did sell off from was that double top that we did note was forming, which caused price to bounce off that key liquidity zone and key resistance level around the 1.0845 level. So very significant level, of course, and explains why we've seen that sell off. Next to talk about though is pound yen, where we see price remaining within this kind of flag which could be forming. It does seem like this kind of flag is forming, since price is staying between these two key trend lines, is continuing this slow upward movement, this slow upward rally, and it'll be interesting to see whether price does remain within this rally over the course of today, as often these rallies or flags don't continue for too long, and the way that price is playing out, the fact that we're seeing this lack of momentum, pardon me, following such a strong bullish rally, does kind of hint to us some bearish potential, but ultimately we'll have to wait and see. Definitely keep your eyes on pound yen though. Next to talk about is Bitcoin, which remains within this range that has now formed since price broke to the downside ending off last week, and now price is reacting once again to this key liquidity zone which price initially sold off from or broke below, which was formed as initially an area of support when price dropped to the downside around the 22nd of June, 23rd of June, and now we're using that same level as an area of resistance. So it'll be interesting to see whether we do sell off from that level, or in fact can we break back above and return back to these higher ranges that had formed a few weeks ago. Next to talk about though is gold, which obviously will be heavily impacted today with the inflation figure that we are receiving, and obviously with tensions in the Middle East growing regarding a potential Israeli-Lebanon war, or Israeli-Hezbollah war. Obviously definitely keep your eyes on gold. It's a very interesting asset to follow, and currently we've obviously returned back to this period of consolidation, this range that had formed before this swing to the upside ending off last week, and then to start off the week we saw price move back down into this range once again. So it'll be interesting to see whether we stay below this key liquidity zone over the course of today, because we are receiving such high importance data from the US, and whether we move to the upside from that and break above that key liquidity zone, or we sell off from that level and move to the downside and return back to these older areas of price. Lastly to talk about though is oil, which has actually sold off somewhat to start off the week, it does seem like. So over the course of Monday, obviously, as we noted in yesterday's morning market briefing, price did sell off. We said that could just be a retracement, as price was starting to kind of sit around that 6180 Fibonacci retracement level, but ultimately prices continued to break below that and is now nearing the kind of levels that we saw around the 26th of June. So a very significant sell-off that we've now seen play out. Arguably that's because we haven't heard much now from the Israeli-Lebanon border, and so possibly the market's now starting to price in the likelihood of that war breaking out a bit lower, but possibly also we're just kind of this could just be a supply and demand type situation in which price slowly moves back to equilibrium. So definitely keep your eyes on oil as it does interact with this lower level of liquidity now. It'll be interesting to see whether you now see it swing to the upside from that level. Lastly, that's all to talk about on the charts though. Lastly to talk about is the economic calendar. We're receiving lots of very important economic data today, so I'll get through it as fast as I can. First, you're receiving the Aussie inflation expectations figure, followed by the German inflation rate figure. So obviously that will affect the euro and other European assets, related assets, so definitely keep your eyes on that one. Followed by that, we're seeing the British GDP figure, as well as the British balance of trade figure and industrial production figure. Followed by that, we're receiving the US inflation rate figure, and then to end off the day, we're receiving numerous Fed official speeches. Ultimately though, the most important figure of the day is of course that US inflation rate figure and German inflation rate figure, so it's going to be a big day for the euro. Definitely keep your eyes on that one. That's all to talk about on the economic calendar though. We've covered lots on the charts, we've covered lots on the articles, lots on the charts, and lots on the economic calendar. It'll be a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.